So which are the compounding machines you're betting on? What do you think a Bharat Shah portfolio, what is a Bharat Shah portfolio for 2017-18?
To try to forecast 5-6 years down the line is very hard. I don't know whether I would like to get into individual names too much, but I would say at an idea level, I still think a lot of consumption businesses even today make a lot of sense to me. I would say pharmaceutical businesses, the right models which are riding on a local growth as well as international opportunity, aided by intellectual knowledge acquisition in form of research, are the right kind of business models which will deliver fantastic returns. And because they are addressing a very large size of opportunity, and they found kind of a critical balance in their journey to harness that opportunity very well. So a lot of pharmaceutical businesses, I think, will be multiple times over than what they are today. I would say select banks would provide a great amount of opportunity, because these are compounding machines, and some of the high quality banks, for example, I mean a bank like HDFC Bank, we have seen that in a very solid, clear-cut manner, while keeping an eye on sensible return on equity, eschewing risk, creating a very strong and clean balance sheet, is almost effortlessly, it seems to be growing at 25+ percentage terms for a long period of time. I think banks are a proxy on the country, and if you believe on the growth of the country, like I do believe about the growth of this country, then I think high quality franchises of this kind will do wonderfully well. I would also think some of the agri businesses have a great future. Many of these businesses are in a very callow state of their evolution. Size of opportunity is large, and there are so many things to be done to make these businesses much richer and much bigger and stronger. And so to that extent, we are scratching at the surface. So some of the high quality franchises, I would say, in that would be very, very attractive ideas to my mind. Automobile remains a big bet. I mean, we have seen companies like Hero Motor being the largest two-wheeler maker in the world, companies like Bajaj Auto being amongst the top two-wheeler makers in the world. We've seen some of the very high quality auto part franchises like Bosch, which relentlessly seem to be growing on their size. I mean, many of these high quality franchises with superb return on capital employed, very strong balance sheets, with a clear, well articulated management strategy for growth, I would think there are enough levers to believe that these businesses will grow and grow. I'm not saying necessarily some of the names that I'm talking are the names that I'm talking about 5 years down the line, but I'm just illustrating and pepping up the point in order to explain what kind of the businesses would have that opportunity. Look at a firm like Asian Paints, for example. Without grabbing a headline, I mean, you see these businesses as real compounding machines. I mean, it rarely ever registers in the minds of people that it grows and grows. But if you look at a 10-year record, somebody like Asian Paints has compounded at a rate of some 27% per annum. I mean, it's an incredibly large number. So there are many examples of this kind where it ordinarily doesn't occupy your imagination easily that these businesses would have compounded like this. Look at somebody like Nestle has compounded upwards of 20%. Somebody like ITC has compounded upwards of 21-22%. Somebody like Sun Pharmaceutical has compounded upwards of 30%. So these are very, very strong, powerful growth and actual value creation in the businesses, where businesses not only generate outstanding return on capital employed, balance sheets are strong, they're addressing very large size of opportunity, which means they still have a lot of miles ahead to walk and to grow. It's not as if they have reached already a saturation level. And many times I think debates degenerate into large cap and mid cap, and I find these debates very artificial and stilted. Because the idea is not about a large or mid-size, or the idea is not about today's large and tomorrow's large. Idea is about quality, that ultimately value creation is very simple. It is high return on capital employed with a decent above average, sustainable, long-term secular earnings growth supported by a quality management and bought at a reasonable price, not necessarily very cheap price, is a combination that you need to have a very strong, sustained bout of long-term value creation. And there are plenty of those businesses around. So those will form part of my basket. I'm not necessarily saying these names are the ones that I'm looking at, ensuring that they remain. But yes, these kind of attributes I would think would have a foundation for value creation.
You just illustrated the kind of businesses and the kind of companies you've liked. So when you buy these stocks and when you buy these businesses, do you look at crude? Do you look at interest rates? Do you look at commodity prices?
Well, crude is certainly an important factor, unfortunately, in the overall economics calculation, because almost 70% to 75% of the crude that we use, we need to buy. And that's a big ticket item affecting and casting shadow on our fiscal balance, on our current account balance and all of that.
So when you invest in some of these stocks, what do you look at? Do you look at crude? Do you look at interest, the interest rate environment? Do you look at Greece? Do you look at what is happening in Europe?
Well, I read about all of them. I remain familiar with all of them, but none of them is the most important or even meaningfully important factor in computing what I want to invest in, what I want to hold. Many times these, pardon my saying so, but sort of intellectual masturbation, which is so very popular, has very little meaning about good investing. Good investing remains simple. It is about buying high quality businesses which have moats, which have large size of opportunity, which are going to be compounding machines, and where we can understand why they will grow, that they have high quality earnings, and that they are reasonably priced when you bought. This is all that we need to do. Everything else is popular indulging into a kind of investment sports, but it is not investments. And to that extent, Greece or interest rate and all that is endlessly occupies time on the news channels as well as in the newspapers, but beyond a point I don't think I would pay any attention to any of these factors. I'll remain familiar with them. I continue to watch and observe. Some do have a meaning in a short run and sometimes for a meaningfully medium term as well. But those are not the factors which are at the foundation of long-term value creation.
Always good to have you on ET Now, and thank you for your time. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Hope you liked the show. I certainly did. Thank you for watching Market Makers.